Welcome to another episode of Dr. Brook on the Block. It's time to grab a seat, buckle up, and take a ride with me through the wild, wild west of the Web3 universe, where we're going to learn all about coins and tokens, NFTs and contracts, digital real estate and the metaverse, and so much more. There's a lot to get through on the block, but I am here to pave the way and help you avoid those nasty pitfalls and rug pulls so you don't get hurt. I'm going to also introduce you to some interesting characters along the way. Are you ready? Your ride starts now. What is up? Oh my goodness. Thank you all for being here. Dr. Brook, the crypto proctor, for another epic ride around the block. We're going to be talking about wallets. This is a thing that doesn't get a lot of exposure or a lot of talk, to be honest. I think that some people do speak about it, and then other people make these comments like, not your keys, not your coins. And that means nothing to somebody new in the space, right? Like, you might hear that, not your keys, not your coins, and go, okay, what the heck? Like, what the heck does that mean? If you are new here, be sure to buckle up tightly. We are in for a wild, wild ride around the blockchain Web3 universe. And if you are a returning listener, thank you so much for continuing to take these rides with me. We are having so much fun. We are learning so much. We are getting introduced to some amazing people. I got some cool interviews lined up in the future, so be on the lookout for those. But for now, not your keys, not your coin. What the heck? I'll let you know what that means. So, all right. We spoke on some prior episodes, of course, with the financial conditions that we're in, people thinking Bitcoin might be going to zero, a lot of fear, uncertainty, and doubt in the current markets, in the stock markets, and then people also on the sidelines watching and waiting and figuring out, does this really have any sustenance to it, or are people truly just like ridiculously losing their minds and nearly putting $1 trillion into a asset class that is going nowhere? $1 trillion in an asset class that is going nowhere. Let that settle in. Because late 2021, and you're probably listening to this midway through 2022, halfway through the year, we had Bitcoin at the end of 2021 at nearly $1 trillion on its own accord, on its own. One asset in the cryptocurrency market, one asset in blockchain being nearly $1 trillion. Are that many people that stupid to be investing millions and trillions of dollars into an asset class that is going nowhere? No, I don't believe so. Obviously, I've created an entire podcast about blockchain technology and why I am so passionate about it and what I want you guys to understand so early on in the game, because we are in the fight you stage of innovation, and we are about to be moving into the winning stage of innovation in a few years. To put some perspective into it, the Securities and Exchange Commission has approved a Bitcoin, not a full spot Bitcoin ETF that Grayscale was trying to get, that just got denied last week. I won't go into detail, but you can look that up. I think it would be very helpful to see what the SEC has approved for Bitcoin, that people can actually trade Bitcoin in traditional assets together, if they're in a traditional fund with a big, huge, like Fidelity or Charles Schwab, they can actually trade Bitcoin through these investment firms, because these investment firms are holding on to Bitcoin. So it's not exactly like to the level we want it at, right? Like $1 trillion is very like a drop in the bucket, considering what kind of money is in the stock market and what kind of money is in other asset classes like gold and bonds and silvers and metals and all those things, right? But you can't deny the fact that $1 trillion is $1 trillion. And if cryptocurrency, in just the short evolution of time, in 12 to 13 years, has been able to get up to $1 trillion, there's something here. Yes, that number was so much higher in early, 2021. And I would say when we hit our all-time highs in late November, there was obviously a lot more money into that market. And we've lost quite a bit of market share as a result of some bad actors in the space, as a result of liquidations that have happened, as a result of margin calls or lending calls, people lending, or investment firms lending money to people to invest in Bitcoin, and that those excuse me, those things getting pulled, out, like liquidated, like meaning they had to be sold off in order to repay their loan. So all of this is happening. There is chaos in the marketplace. People currently, and if you've purchased any cryptocurrency, especially if you're a newbie, what I would say a newbie in the space, you probably purchased that cryptocurrency off of a centralized exchange. Centralized exchange would be anything like a Coinbase, crypto.com, Kraken, Gemini, FTX. All of these are centralized exchanges. There are so many more, but those are centralized exchanges where you go and you purchase your cryptocurrencies. Now, you are welcome to leave that on the centralized exchange. So you go into your app, you can see, your funds, your money, you could see your assets, what you're hanging on to, all of those pieces. You have access to see those things through that centralized exchange. However, with no current regulation in the actual cryptocurrency markets, when you are like facing a situation like we are right now where people are like freaking out and fires everywhere, and like, I mean, they're just losing their ish over everything. The reality is if these centralized exchanges go down, you can lose everything. If Coinbase files for bankruptcy, which there was talks about that, because they are the first publicly traded um, crypto exchange that you can actually see, because they are publicly traded, you can see their earnings. And they've lost a lot of money over the last 2 quarters as a result of not enough people trading or moving funds around and getting into crypto. More people are getting out of crypto, things like that, right? So if Coinbase goes down and does file for bankruptcy, all of your assets on Coinbase are gone, right? Because they're part of a centralized exchange. You have no protection under Securities and Exchange Commission. You have no protection with the government. And so this is a hard little line where we're at in the crypto market spaces, because we want decentralization. We absolutely want decentralization. But in the same regard, some people are looking to have that regulation and believe that if that regulation comes in, that we're going to bring a lot of money off the sidelines and into the marketplace, because there is that regulation, because there isn't the fear of taking $100,000 all the way to zero on the backs of not bad investment choices necessarily, but on the backs that the actual exchange went down. Like, that is crazy. So, we there it's this weird dichotomy, because I think that we do excuse me, guys. I think that we do I've had this cough for a few weeks. It's definitely not COVID. I've tested. It's more like gets caught in my throat, and not so much in my lungs. It's like when you like swallow and get something caught. But it's going, it's moving its way out. So I'm definitely healing. But I think when I talk too much and take too much air in, that's when I start these little coughs. So you're going to have some fun with future episodes, and I'm not coughing. I'm going to miss it. Anyways, no, I'm not. So, you have all of these, people that are like not wanting to invest in crypto as a result of this no regulation, but then you do want some regulation to bring more people in. So here we are, we're kind of caught in a rock in a hard place. Well, one of the ways of actually protecting yourselves against these sort of like major liquidations, say the entire crypto exchange you purchased on goes under, is this reality of not your keys, not your coin, meaning you can move your assets off of that exchange and into a DeFi exchange, a decentralized exchange through either, well, if you're moving it through a decentralized exchange, you're going to be moving it to a hot wallet. That is called a hot wallet. So hot wallets are anything that you can access via like a app, via a web browser, like a MetaMask is considered a hot wallet, and you store your assets in those wallets there. Now, if the whole entire exchange goes down, they have no access to your tokens, they have no access to your coins, so you're safe in that regard. Does not safeguard you against the value of the actual asset going down. So say you bought a coin at $1 and now it's down to 5 cents, it's going to be 5 cents in your hot wallet too. It's not, add $1 into $1. Like, no, because you haven't actually shifted or changed the asset into something else, whether you took your cash out, your fiat money out of it to maintain the dollar, or, you bought a different asset with it, it's still going to have that same value if it's the same asset. So if you're buying Bitcoin at $1 and you're moving it into your hot wallet and it's still Bitcoin at $1, if Bitcoin goes down to 5 cents, which of course you guys hopefully understand that these are just really crazy numbers I'm throwing out, because even Bitcoin at its lowest right now is trading like upwards of like 20,000 ish. It's fluctuating underneath, a little bit above, underneath, a little bit above, and whatnot. So that's transferring it into a hot wallet. So you're transferring it and you're responsible. This is one of the biggest issues with the Web3 world right now, is it requires you to be responsible. So we don't have the ability to just reach out to our bank and ask them to help us like reset our password. Should we lose our password? We don't lose our funds. It's not, we have $100,000 in the bank and we lose our password and shoot, how are we going to have access to that? But when you have funds or when you have assets in a hot wallet on or in the Web3 world, you are responsible. You are responsible for that seed phrase or those passwords, whatever they look like. Most of them are seed phrases, meaning like a series of 12 to 24 words in a particular order that you are responsible for making sure you either know, or you know where they are, or they're not going to be destroyed, or like someone's not going to be able to access your funds, but you are responsible. You cannot go to MetaMask or to other DeFi wallets and ask for them to reset your password. They will not have access to that. That is why it is so important when you're setting up these wallets to understand, take the time to actually write these words down. Do not take a snapshot with your phone, but be intentional about writing these words down, putting them in a very safe place. I know some people put their security phrases in a safe deposit box at their local bank because, fireproof, all of it. So anyways, you want to move your assets from a centralized exchange to a decentralized exchange for protection if and when these fallouts happen. There's been a lot of shakiness in the marketplaces. There's been a lot of companies, centralized exchanges that are actually being near liquidation, and they're being quote unquote bailed out. Now, the new bailout person for the crypto space is SBF. S as in Sam, B as in Brook, F as in Frank. SBF is the owner, founder, whatever you want to call him, of Lordy, of FTX. FTX is a big, centralized exchange, but they have a lot of money behind them because of Sam Bankman-Fried, Sam Bankman-Fried, and he is like the new, Federal Reserve for the big, fallouts, and he's been helping companies be able to survive by bailing them out essentially. And what it's looking like it is coming down to is a lot of the companies that he is bailing out, like Voyager and BlockFi, might potentially in the coming years be turned around and purchased by FTX, and then FTX completely like grows their entire database of users as a result of being able to acquire all of the holders with BlockFi and all of the holders with Voyager. So, but to safeguard yourself against those liquidations, you need to be able to move things to either a hot wallet, which I just explained to you, or a cold wallet. Now, a cold wallet is like a USB. Like, just think like those little USB drives that we store photos or files and things on. That is what you could get them, in many different forms. It doesn't actually have to be a USB. There's a company called Ledger that has these like portable USBs that you can hold all of your cryptocurrencies on. Or there's things like it's like a metal credit card almost. And that's like a cool wallet, like a cold wallet. And so you can move all of your assets off of that into the cold wallet, should you not want to move it into a hot wallet, and be able to like have the safety of your coins there. So that's like the big differences between a cold and a hot wallet, and why you would really want to be utilizing those, especially in so much time of uncertainty here. So when you hear someone say, not your keys, not your coins, you understand what they're meaning. So if that's the case, not your keys, not your coins, it means all of your coins are being stored on a centralized exchange. If the centralized exchange goes down, you are at a loss completely. So you need to then move everything to a cold wallet or a hot wallet, your choice, but be very specific. Personally, I do like Ledger. I do have some in the crypto.com DeFi wallet. So it's not on the crypto.com exchange, centralized exchange app. It's in their DeFi wallet. And then I do utilize MetaMask. MetaMask is another hot wallet. So I do have multiple different ones. Things to look into, cold or hot wallets are accessible easily, on the internet. And I can put some links in the show notes as well. But yeah, so cold, hot wallets, that is the lesson for today. I hope you learned some really awesome new things about Web3 and just how to engage more safely in this space, because guys, I'm really trying to protect you. That's why we talk about seatbelts. That's why we talk about, it's going in for a bumpy road, but like, let's come out like as unscathed as we possibly can. I am not telling you we are not going to be absent of bumps and bruises, but there is opportunity for us to have those bumps and bruises, but still win big overall. So on that note, the ride is coming into the station, and we will see you on the next one. Have a great rest of your day, and we'll talk soon. You made it! Congratulations! That wasn't so bad, was it? I hope you laughed and learned a little bit more about this Web3 universe and how simple and fun it can really be. Would you be so kind as to leave us a review and share it with your friends and family? It would mean so much to get this out to more people as we embark on the greatest transfer of wealth that has ever happened in human history. Can't wait to see you on the next one.